Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Jeff Shi, the CEO of QuoteHound. Jeff, thank you for coming on the show today. How's it going?
How's it going? Thank you for having me.
Going fantastic. By the way, I love the branding, the sweater and the background image. It's very well put together. Somebody in marketing is doing it well. So we always give the guest a chance to give the elevator pitch. What is QuoteHound?
So QuoteHound is a lead exchange, right? So on a simple term, so most insurance agency owners of the world can't understand it, or broker can't understand it. When you leave State Farm agents, when you leave Allstate or Farmers or whatever, and you want more choices, right? So you can go over the independent world and you can sell 5, 10, or even 15 insurance carriers as brokers. Well, we want to offer the same philosophy and same platform on the marketing side as well. When you deal with one lead company, right? So let's just say you deal with Nike or Adidas, their sole purpose when you talk to their rep is they want to sell you one thing. They want to sell you as much Nike as possible. Whether those Nike work for you, whether they're custom tailor-made for you, they don't care. The end goal is to see product, sell product, right? So we want to offer the broker mentality of lead company where we have no alliance to anybody. Our goal is our customer, right? Our goal is take care of the people who pay our bills, which is our customers. And let's just say they give us 10 grand and we want to spend that 10 grand how we see fit them the best. So we help agents build custom-made, tailor-made marketing model for them. And that's one thing. So the second thing is there's a lot of retail account managers just fresh out of college, and they're here just to fill account. They look at the traditional SaaS software training platform, and business development, account manager. It's just literally a meat packaging process model. But imagine if you had people who sold insurance before through the lead process, through the CRM process, teaching agents how to use their money, leverage their money to buy the best leads and grow their business. Because at the end of the day, everybody has the same access to everything, but sometimes it's consulting, it's access to knowledge that can help them leverage to buy the better product, right? So yeah. That's kind of what we are.
Okay, so leads is one of those discussions in the agency space, in the broker space, that you hear all the time. It seems that everybody that doesn't have a referral book already built is buying them, and it doesn't seem, from my perspective as not being a broker, it doesn't seem that like there's a super reliable go-to provider of leads that everybody swears by. It's the other way around. It's like everybody's always complaining about their leads provider, and everybody's always switching around, trying new ones.
Yeah, 100%. The more you hear people complaining, the bigger the opportunity there is, right? Like a lot of people say, I want to build an insurtech company. Well, if you don't know what's broken in insurance, how can you build an insurtech company? The definition of insurtech is not some APIs or some algorithms or some automation process or some SaaS software. The definition of insurtech is it must solve a problem. So for those people who've been in the industry, like I have for a long time, and some of our team members, we have seen so many things that's broken, and we're trying to solve them, right? And what you see in the investment in the VC world of all the money coming to the insurtech world, I would say 90% are D2C. Those of you customers don't understand that term, is direct to consumer, right? But I would say less money, not enough money is going to B2B, right? Like VC giving money who are trying to disrupt the money side that deal with agents. So we might think, okay, how do I build the next branch insurance, open insurance, clear cover insurance, HIPPO insurance to disrupt against the past, State Farm, Allstate, Nationwide, right? That's what a lot of people thinking, like, how do I build the next Progressive by giving money to these manufacturers? But a lot of people don't understand there's so much money in the distribution game. So who's trying to disrupt Hub International, AJ Gallagher, Marsh?
The commercial line side is hard, is very hard.
Marsh averaged $2 billion a year, and they have a lot of personal line side as well, right? You have Brown & Brown, who have massive personal line business, right? Like this much money is going to be manufactured in the insurtech world. And this much money is going into the distribution world. And if you look at market capitalization of what companies worth, I would say the AJ Gallagher, the Brown, the Marsh are worth as much as some of these manufacturers like Travelers, like Progressive, like Nationwide of the world, right? So we see a massive opportunity, when we co-founded Quantum, and then, now the B2B world of the relationship of, EverQuote, QuoteWizard, DataLot, all these companies, there's a lot of companies trying to fund money, like into Kistera, into the next potential eHealth, GoHealth, to disrupt those guys. But we see there's a disconnect and we're filling a void. We have a niche that we're targeting to fill that void of the distribution of the leads world.
Okay, so help me understand how you had the idea. So you were for about 10 years running your own broker, right?
Correct. I was a captive agent. I was going into a bento box, right? Like straight up, this is McDonald. McDonald would do things one way. I joined one of McDonald, which was at the time Allstate Insurance. I joined it for 9 years, made tons of mistakes, and survive, right? When you're a startup, you're fighting like that third monkey going on Noah's Ark. You're just fighting to survive.
Love that metaphor. Okay.
All you want to do is survive, survive past each year, survive each payroll, survive each renewals, right? Another renewal coming, another annual bonus coming that can take your business out of intense level, and going to, a little bit more relaxed. But I sacrificed so much in my 9 years building that business where, I built up $27 million book from scratch and buying some acquisitions, area, Virginia, right? That was very, very low on premiums. Nothing bad happens in Virginia, no catastrophic events. So while I had to fight and claw my way through, I learned a lot of things about survival, and it allowed me to build out the next venture. And spent 2 years, building out with the co-founder Justin Edgar on Quantum, and now, we're ready to take QuoteHound to the next level. QuoteHound was a company that we piloted for 2 years and tried to figure out all the mistakes that we could possibly make, and we try to make as many as possible in a really, really fast time. And now we're taking our best practice and we're taking it on the road now. Now we're pushing on the Medicare side. We're pushing on the healthcare side. We're pushing on the life insurance side. We started to originate our own traffic, commercial life, and which is a little bit faster pace than I am comfortable with. But at the same time, our main focus are lead exchange. Like you can come to Costco and buy Sprite, Coke, Pepsi. You can buy Kirkland product if you want to, but our goal is to sell you what works for you.
Yeah. So for the listener who's an agent, has been using leads and hasn't had too much luck, what does it look like to start working with QuoteHound?
So being an agent myself, I think, first of all, I have conversation with business owners. I don't jump into giving them a price guide because it doesn't matter if my lease is $1 or my lease $100. If I don't know what their business model is like, then I can't help them. I had a sales manager who somebody sent to my refer my way, which we appreciate referrals. We love referrals. And she said, we want to buy 5 leads a week. That is about $30. She wants to spend $120 a month. I told her I can't help her because that $120 after expenses and profit margin doesn't cover my time that I spend on a call or email with her, right? Our margins are thin. That's how we provide a better service so our agents can be successful. So things like that, agents might not understand. And she took offensive to it, called me a couple names when she got off the email. But at the end of the day, we have a niche market. We are targeting agents who have aggressive growth. 1%, 2% is not in their vocabulary. So a couple of things, right? There's a broker called SIA. Their CEO talked about how they have 10 billion book of business and they have 9,600 agents or 9,300 agents. If you do the math, that's about $1.1, $1.2 million premium max per agency. If you do the math again, that's about 120, 130,000 in revenues. If you do the math again, what are they left with after 2 CSRs? Right?
Yeah,
so
they're barely paying themselves.
At the end of the day, I see this industry going through a transition, right? We constantly hear, oh man, mergers, acquisition is so hot. It's nothing yet. We haven't seen nothing yet. At some point, we're going to see a mass exodus of SIA agents who've been around for 30 years and they run in one-man shop or 1+1 or 1+2 shops. And then we're going to see continued absorption of big buying small being buying tiny. And I see this industry, if you want to spend money, you got to size up, you got to scale up, right? Whether you go to SBA, go to another bank resources to get a $500,000 loan to scale up, to build cash flow that you can burn negative for 18 months to grow organically, or you just had to go buy a book of business. And right now, book of business trading at 3x, 4x, revenues.
So a lot of interesting stuff there. So it's an interesting prediction of the SIA agents. What I've seen a lot of exclusives go to SIA, right? A lot of former State Farm, former Allstate, former farmers go to SIA. That's interesting. Imagining or like.
I mean, SIA, this is just an example, right? There's so many aggregators, clusters, franchise network out there, but what a lot of people don't understand is the industry is hard. Yes, you get the freedom, but to fully grasp, learn yourself on 10 to 15 carriers and understand the billing cycle, the technology, the claim process, and then try to do it on 15 times is very, very hard. And, we see carriers, they don't want to spend all the administrative manpower or leadership manpower on trying to teach everybody who might not place more than 10,000 a month in your business, right? So, and we saw there's a massive exit in the workforce. Why? Because a lot of boomers are getting old. They're moving to Florida and Tennessee, right? We have not seen that dramatic effect on agency code or subcode exiting yet, but I think is right around the corner because there's a thing that people talk about. 5 truck drivers are leaving and 1 truck driver is coming in. I think that applies to all industry, and I think that applies to our industry. And then the problem with our industry right now is we're not having enough Cody Askins of the world or Jason Cass of the world saying, I make 7 figures. I love what I do. F-bomb, 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 F-bomb. I love what I do, right? YouTube, TikTok, Instagram, right? Because our generation people is on what? They're on Facebook. Who's still on Facebook, right? Because Facebook is dedicated to a crowd, and that crowd is aging. So I'm not seeing enough insurance agents, agency owners specifically, on Instagram, on Snap, on TikTok. So how do the next generation get inspired to come into our industry? Like, I would love to see average age of agency code or subcodes that's out there, because I bet you that is aging at a super fast level, and these insurance carriers are panicking if they're looking at the stats.
And
because
survival
it's happening to every industry.
agents is low.
There's no way our industry is shielded from it.
No, absolutely not. Yes, we're definitely aging out as an industry, and younger agents coming in, there's a lot less of a path to growth. I mean, those that are really good at digital marketing seem to be doing well, but in general, we don't know how to train them in general. Okay, so basically, the goal with QuoteHound is to partner with agencies who are aiming at fast growth, helping them manage their leads and close on those leads.
Yes. At some point, mobile search is going to be dominant. Mobile search is no longer, oh, those are trash leads. Oh, those are shoppers. Oh, those are non-standard leads, right? That's what people said about Progressive 15 years ago. Progressive is the smartest guy in the room. Well, some people say that way. Some people might not agree, but they're very smart.
They're fantastic at what they do. They're fantastic at underwriting. They were first to telematics by like 10 years. And between Progressive and Geico, they have grown to challenge State Farm basically in the personal line side, right? They've if I'm not mistaken, like Allstate was #2 in personal lines in market share, and it's now Geico followed by Progressive. Then
think about like they bought Safe Auto, Esurance, Answer Financial, NetGen, just to continue their revenue. Whenever a company buying future debt to pay for future revenue, they're not building an organic growth sales force. And you know what? If it wasn't for COVID, Progressive might have 10,000 in-house commercial sales reps right now to challenge the next phase. The reason Next Coterie get all that VC money is because it is wide open, the small commercial market, even medium. I'll say small and range medium, right? It was like what Geico and Progressive did in the personal line, but now that next run is here. And the only thing it haven't got here earlier was because we had this thing called COVID and everybody struggled on hiring. And now we're all starting at zero.
Okay. So if I've got an agency with fast growth goals, with big growth goals, I've been messy in my leads. Maybe each of the agents are buying their own leads. There's no centralized way to do our leads in a way that we know works. How do we schedule a conversation?
Where are you located, Tony?
Well, I happen to live in Atlanta, Georgia, so let's go ahead and say Atlanta,
Georgia.
Yeah.
Okay. So let's just say you like this area called Marietta, Norcross, and Buckhead. Those are fast new builds, North Georgia, 7-lane roads, 8-lane roads, 90 miles per hour speed limit. Everybody is coming down to Atlanta from Chicago, New York. Tons of growth. You want to dominate, right? So we will go ahead and say, this is our target market. This is where our carriers, let's just say Grange or Safeco or Nationwide or Branch, they are dominating. We look at competitive rate. We look at retention rate. We look at loss ratio rate. I'll work with your market rep from your independent carriers, try to get the best retention zip code, loss ratio zip code, and close ratio zip code in the three major areas we talked about, right? And then we will say, you know what? Let's build business that stay on the book, right? Homeowners. And let's also build autos, because at the end of the day, there's a lot of renters out there, you know, they're stable too. But let's find the right age group. Let's just say 35 to 55-year-olds is our best close age group. So now we have data, criteria that match data, and then we're going to go on offensive. And we are going to pull leads from every lead vendor. There's 10, 15 lead vendor out there, whether it's live transfers, data leads, click to calls. We're just going to pull from everybody. And we're going to say, we're going to dominate this area. So think about direct mail, how you bombard specific geo area you want to target, but on a mobile search level. And then we shove it down your salespeople's throat. And then our goal is to build a performance level like Progressive and Geico. Progressive and Geico, out of 8 hours a day, they can get 6.5 hours of talk time out of their call center reps. If you look at anybody who have ever achieved any stats like that, the closest one is USAA. And if you look at some of the bigger guys who have all the money in the world, State Farm, Allstate, and all those guys, their reps are not achieving the same amount of call time versus Progressive and Geico. And that's how they're maximizing their payroll. Their skill set in their call center is not just couple tech, it's also how their mentality is. They waste spend on marketing 3-to-1 ratio, 4-to-1 ratio against the other billion-dollar insurance companies. But their goal is to get the best return on investment for their call center reps, because they can get 6.5 hours versus 2 hours. And that's something insurance agents are not doing. They're getting 1 hour, 2 hours.
Yeah, nowhere near. Nowhere near. And you've got multiple carrier systems. It's going to be hard to get that much productivity out of your people for sure.
Yeah.
Okay. So basically, you help them come up and execute on the strategy on how to best secure and best utilize.
There's simple ones, right? Let's say we start chasing median household income, right? We find the best median household income zip codes, and we just go crazy on buying leads those areas, right? Because retention is a big thing. But if you want to build retention, you got to start buying your leads in areas where people pay their bills. So people pay their bills usually follow median household income. You know, what I'm saying is not hard, it's not sophisticated. It's not. But it takes discipline to consistently do
it. Okay, makes sense. Awesome. Thank you so much for your time today. When it goes live, I will tag you on LinkedIn, and I will tag QuoteHound and include the QuoteHound page on the show notes. And thank you so much for taking some time to walk me through it today.